G'day folks, Jim here from FX Charts. Thanks for tuning in 13th of January. The non-farms on Friday night were a pretty appalling miss. Instead of coming in at 195,000, they only came in at plus 74,000. So the US dollar took a bit of a hit. The real action was in the bond market where yields fell quite significantly and took dollar yen down with it in particular. But the dollar does look to be under a little bit of pressure for the next few days, as we'll see on the charts. Today's pretty data free, so I think we might expect a reasonably range bound session. But tomorrow we've got the December US retail sales, which is the biggest month of the year. So we're going to take our next direction really from them. If we go and have a look at the charts, as we can see on Friday, from the hourly chart, the euro spiked higher after the non-farms. It's failed to take out 137 at the current point, but it does look as though it could be in the process of building a bull flag. Now the hourlies are rather overbought, and I'm not sure the euro may fail up here, but so the hourlies are becoming a bit overbought. But it is looking as though we have the potential to go up here to sort of test this 137.20, possibly 137.60 area. If we go and look further out, the 4 hourly charts do have positive momentum. So while as long as this rising trend line holds us down around to 135 3/4, I don't think we're going there anywhere close for the next session or two. I still do like the US dollar in the longer term, but I think it's probably too early to buy dollars at the moment. And yes, we could go back up to this, or 137.5, 138.90, which was this top here. I think that's fairly safe for the time being, and we're going to run into some congestion around here, sort of 137.5, 138. So I think there's plenty of sellers up there, but it does look as though for the time being the momentum's a little bit higher, and the dailies, as we can see, are pretty flat. So realistically, probably not worth looking for too much in either direction, and we're probably just going to have some more choppy trade. Eventually, I think we're going to take out this support line, but that may not be for a while. And if and when we do, then I think we're probably heading back a little bit lower. But for the time being, that looks to be on hold. Dollar yen, well, as I say, that although it did spike up to 105.30, it came off very sharply on the NFP data. And US yields, as I say, are headed lower. That's going to keep the pressure on the dollar, and it wouldn't really surprise me to see sort of level down around to 102 in the next few days. The hourlies are rather oversold. It's a Japanese holiday today, so we probably don't get too much action. The 4-hour indicators are beginning to point lower. We've broken this trend line going back to sort of October. So if anything, I think selling rallies is possibly the way to go up to really about 104.5, 104.60, looking for a retest of this for 103. If 103.70 breaks, then I think we're going down here. So 103.5 is some support, and below that, then I think we're probably heading back down here to level sub 103. Cable. I should just say that on dollar yen though, the daily indicators also are pointing lower, so it kind of gives me added confidence that we may have seen a bit of a medium-term top in the dollar, and that we are going to come a little bit lower. So moving on to cable, like the euro, that spiked high. There was some poor industrial production data out of the UK earlier on Friday. That saw cable break down, but having made a low to around 163.80, it then spiked quite dramatically higher towards our resistance around 165.20, and since then it's chopped around. Not sure we're going to do an awful lot today. We've got the UK CPI on Wednesday, I think it is, so that's worth looking out for. The 4-hour charts are really not showing us an awful lot, and maybe we just move along as we have done at the closest, or between 164 and 165. We may test 165.20 again. I don't think we're going much higher today though. The dailies, well, we've got some divergence on the dailies. The MACDs are running out of steam on here, and although we have had the higher price action, so I suspect that for the time being we are going to just drift sideways. Well, I wouldn't say drift sideways. We're going to chop sideways it's going to look big at the top and offer at the bottom. But ultimately, as I say, 164 to 165, I think will probably largely cover it. Dollar Swiss. Well, I bought some dollar Swiss on Friday, probably a little bit too early. I bought it up around here before the non-farm payrolls. I thought the dollar looked all right. Probably a bit too early for that now. I have to say the dollar doesn't actually look so flash on dollar Swiss at the moment. The hourlies look as though they've got a bit more downside potential. We have closed right on the 200-hour moving average, but let's go for 4 hours. The momentum is decidedly negative, so we could possibly come back down here and test this sort of level down around 90, and below there it's sort of 89.60. I suspect that may, if we go back to the hourlies, down around 89.60, which is down around that level there. If we broke that, then 89.20 comes into view. On the dailies, though, the indicators are not showing that we're necessarily going to have a monumental collapse in the dollar, and I'd still prefer to buy it. We're in the middle of the channel now. The break of the 100-day moving average has proved false so far, but I do prefer to look for levels to buy dollars, as I do think we're probably going to eventually head back towards the top end of the channel, but that's going to be a while to come. The Aussie, well, it was a bit of a slow process, but it did eventually break higher after the non-farms, and we're now having a look at 90 cents. In the bigger picture, the 4-hourly charts, we're at the top end of this channel that's really been that really started early December. Now, if we break above 90.10, this first FIBO level here is at about 90.35, and if we break above there, then I think we might have a bit of an acceleration high. Not sure we're going to do it today. We've got the ANZ job ads and some housing data out today, so I'm not sure what's going to drive it, particularly as it's a Japanese holiday. So we might just drift around here, but watch out for a break of 90.10 to head towards 90.35. Now, if the channel holds, well, in that case, I guess we're probably going back down to sort of this sort of area here, down around 89.60 on the day, and in the bigger picture, maybe we're in an 89 to 90 cent range. The dailies do still look mildly positive, though, and I do think there's a good chance that we might head a little bit higher. The market seems a bit short, and so there are going to be some stops above 90.10, which could take us higher. The Kiwi, well, it's at the top end of its 82 to 83 cent range, which has been ongoing for a little while now. As you can see, we've got some decent resistance ahead of us. A break of 83 sort of 10 would take us up to 83 15, 83 15 17, I guess. So it's not a huge move, but above there would take us. This is where we are now. Take us up to sort of 83.65. This is 83.35 here, so that will be some resistance. But a break of that would take us back up to 61.8% of the move down from above 85.45, I think it was. So that's at 83.60, and above there we're going to have another retest of 84 cents. Don't think we're going to do that today, though. And as I say, this is strong resistance here, so there's not an awful lot to drive it. And if we fail here, well, once again, as with the Aussie, we're going to come back into the middle of the 82, 83 cent range. Around 82, 50, 60 should be support on the day. But that aside, I think it'll be a reasonably range-bound day. As I say, there's no data out. It's a Japanese holiday, so Asia should be particularly quiet. The market will start to focus on the retail sales for tomorrow. And that could be the next key driver. So until then, have a good day's trading, and I'll talk to you tomorrow. Cheers.